Morning, everyone, and welcome to Traders Espresso, the AM video edition for Friday, March 9th, 2018. And wow, lots in the news. President Trump announced the tariff details yesterday. Canada and Mexico will receive exemptions indefinitely. I do believe that we retain the right to impose tariffs on Canada and Mexico if we do not negotiate a suitable NAFTA replacement, NAFTA contract. The argument behind it, or the justification, is national security concerns, I think. So I'm hearing like Australia, for example, could argue that they should be entitled to an exemption, or they should receive an exemption because of U.S. national security concerns. In other words, we would want to have their key supplier, and they therefore should be exempt from tariffs in the event of an emergency. Same thing with Japan, for example, which is the world's second or third largest steel producer. Additionally, President Trump announced that he will meet with Kim Jong-un. This has been brokered by South Korea. After the North Korea made a big show at the Winter Olympics, and South Korea has effectively, it sounds like, has effectively brokered summit talks with North Korea, and Kim Jong-un will sit down to talk about denuclearization. Now, what that looks like, we don't know yet. I hate to say it, I'm skeptical because we've seen this movie before. But anyway, looking at this is the S&P futures that we're looking at right now. This big spike, this is all about jobs. The job numbers came out today, and the economy added 313,000 jobs, so that was higher than expected. But wage inflation cooled a bit. So I'm not sure what to make of that anymore. I mean, I don't know whether or not investors are still afraid of inflation. I don't know that they are. I think that they're coming to grips with the fact that we are in an era of monetary policy normalization. And so because of that, things like that don't have to derail the markets. You would think that a big change in employment like that, because the consensus number was 200,000, we came in at 313. That would, in the past, in the last, maybe a week ago or longer, would have caused futures to sell off because of concern that, the economy, that means the economy may be overheating and the Fed will raise rates. We seem to have gotten the stance from Jerome Powell that there's no evidence that the economy is overheating. So I think the markets, at least the equities markets, are breathing a sigh of relief. The fact that hourly earnings, that wage growth is cooler than expected, helps temper some of those inflation worries anyway. The consensus number on year-over-year average hourly earnings, the year-over-year increase, the consensus was 2.8. The number came in at 2.6. The unemployment rate came in just a smidge higher. The consensus was for 4. Last month we were at 4.1. We came in at 4.1 again. Economists surveyed had estimated that the number would drop down to 4, and it held steady at 4.1. Again, not enough to really cause anybody concern. I mean, we added jobs. If anything, maybe the slightly higher unemployment rate than expected, the lower wage growth, might cause the Fed to back off a little bit. But it's pretty much official. I mean, every major central bank now has signaled an exit to their monetary stimulus. In other words, they're going to they're not announcing their exit, but they're actually publicly saying we're looking at when we start to exit quantitative easing, monetary easing. We're starting to look at when we tighten monetary policy. Before, no one was even saying it. I mean, the Fed was the first to say it. Japan, the Bank of Japan held on for the longest time, and the European Central Bank held on for the longest time, and have only recently even alluded to that. So in light of the job numbers, not only have equities spiked, but yields have spiked. The index for the 10-year Treasury yield is up little over 1%. So that yields up to 2.896 now. It's knocking on the door at 2.9 again. You can see that the Dow and the NASDAQ futures are up about 2/3%. The S&P futures are up a little bit more than 0.5%, and the Russell's in right under 0.5%. Volatility is down. All the indices closed up yesterday, the equity indices in the U.S., except for the Russell, which closed slightly down. Pretty much across the board, Asian and European indices were up overnight. They were encouraged by the. I wouldn't characterize yesterday's close as a strong close, because it did soften in the later part of the day. It did close off of the highs of the day, but it wasn't a down day, which was good news. Energy commodities are up. Copper, platinum, palladium are up. Gold and silver are down. Soft commodities are down. That's what we're looking at today. The dollar is basically flat. I mean, when I was looking at it a little while ago, it was 0.01 up 0.01%. It's up 0.04% now. So to the extent that the jobs numbers are having any impact on the dollar, it's marginal at best. I would expect it to be a pretty bullish day today. But of course, always keep an eye on things. Watch out for the trends. But right now, it seems like the risk is to the upside. So that would probably be the way to trade until you see a break. If you see a break below a trend line, draw a trend line of support. And if you see a break below that, then that means it's a short. And the opening bell just rang, so I'm going to cut it off here, and I'll join you back on the live stream here in just a little bit. Thanks for checking in, folks.